Well, with that as a background, let's go to our special guest, as always, on Monday evening, Bob Chapman from the International Forecaster. Bob, good to have you with us.
Well, thank you. It's nice to be here again.
Oh, boy, certainly gold is shining pretty brightly, isn't it?
Well, it's been doing pretty good. I think what's interesting is we had 2 Mondays in a row where gold has performed very well. And that's unusual. Usually it's not a good day for gold, Monday. And what happens is it usually gets attacked by our government. And on Monday the stock markets get shoved up. And the bond markets as well. So, you know, it was a very unusual day, but twice, 2 weeks in a row. And so I think gold is trying to tell us here that it wants to go considerably higher, especially when you see the trading in London in the physical market. The sellers don't have any real power in that market anymore to make the price go down.
Oh,
and that's extremely important because there's heavy central bank buying out there, which is China, Russia, Iran, the Gulf states. Of course, we know that in China they're encouraging people to buy gold and silver, which up until a year ago they couldn't do at all. And so you have these people who are taking the physical off the market, and in so doing, they leave a big job for the U.S. to try to keep the price down. And, of course, the longer they keep it down, and they've been doing this since 1988, the longer they keep it down, the more opportunity they give people to buy at a very inexpensive price compared to what they should be paying for gold.
But don't you think that the big boys, I'm talking about the Rockefellers, the Rothschilds, the people of great wealth, they want to keep it down so they can buy it up because they know the average American doesn't understand what's going on, and I believe that somebody's been accumulating gold for a long time. They just haven't told us really who it is. We're getting back here in just a few minutes with Bob Chapman. Well, Bob, I thought the idea that you've been putting forward is you don't think that we really have the gold that we're supposed to have, because, of course, not in the United States, but England is selling a coin melt. And this is not certainly what ordinarily central banks deal in, but they've been forced to because apparently they don't have any real gold. What's the story about the Bank of England using coin melt, though? I could understand why our central bank, would use coin melt if they've done away with most of their gold supply. But, of course, they wouldn't tell the American people that. But why would the Bank of England use coin melt gold?
Well, what the United States has been doing for years is swapping gold. They didn't want people to know that they'd been in the market, and the only people, or the only central bank, that has coin melt is the United States government. So if the United Kingdom has coin melt, they swapped it with the United States government. And so the U.S. probably wanted to do some selling in the market. So let's say they sent $1 billion in coin melt over to England, and England sold an equal amount into the market in behalf of the U.S. government. And that's how other governments would get that kind of delivery, which is 0.88 to 0.90, sometimes 0.91. And normal legal delivery in that market, I think, is 0.99. And I don't know for sure, but it's something like that. So the U.S. couldn't make delivery. Back in, I think it was 1978 or 71, Anthony Sutton wrote about U.S. gold, and he said only 19% of the gold held by the U.S. government was good delivery. And we've seen for almost 2 years coin melt showing up in the market, not necessarily from the United States, but from other countries. And this latest episode is another example. What the the Bank of England was doing is that two bullion houses couldn't deliver against contracts, and they had to deliver for them, and that's how this melt came to light. And this was just a few days ago, last week. And I think that England, if they have any gold at all, has very little. As you remember, when gold...
Hold that thought, Bob. We're going to have to bring on the stations. Well, this is Dr. Stan, and Bob was just saying he doesn't think that England has very much gold, and he doesn't think that the United States has very much gold. Certainly, it was a week ago, 2 weeks ago, when Germany tried to get the gold that was being held. They wanted to get the gold for themselves. It's been held in the United States, and the United States wouldn't give them the gold that was on deposit here. China and the Arab countries tried to get the gold that was on deposit in London, and they wouldn't provide it. And Bob's questioning, do they really have the gold? Apparently, on one of the exchanges recently, people had bought forward contracts on gold, and when they said, well, we don't want money, we want gold, they were told, well, we'll just pay off in money. And they said, no, we want the gold, and, well, they don't have any gold. So pick up the story.
COMEX, not too long ago, had to deliver on gold contracts, and they did everything they could to keep people from doing that, and they had to borrow gold from Canada, and Canada said the gold was, they had gold missing, and they didn't know where it was. And
how can a major country have gold missing and have no idea where it is? I mean, that's like you're losing the crown jewels, but we knew it was, we put it in that case, and oh shucks, we must have made a mistake. I mean, well, you don't lose your gold if you're a country.
It shows you how patently idiotic the excuses are. I mean, lose tons of gold. What happened with it is it went to the COMEX in New York, and the COMEX was also supplied gold by the European Central Bank because it couldn't make delivery. And so that's where some of the gold has gone to recently. And how much the European Central Bank, how much gold is left available at COMEX is questionable. And then you have the ETFs, the silver ETF, which is SLV. In their contracts, it says they can use derivatives and futures contracts. And also, it's my suspicion at GLD, which is the Exchange Traded Fund for Gold, that the same thing's going on. And I think in both instances, they might have a third to a half of gold that they say they have in whole contracts. But what happens if somebody doesn't deliver against the contract? And, then they have a failure. And that could happen on a widespread basis, leaving the people who own those two exchange-traded funds without their gold. And so I think it's going to become a major scandal, non-delivery of physical. And what's happening is the central banks throughout the world, who are the buyers, there's India and China and Russia and Brazil and Iran and Venezuela and the Gulf states as well. And so there's tremendous pressure on that physical market, and they only can hold it down so long. Another thing is that there's almost a major short position in gold, almost by the fact that the week before last and then last week, the short positions came down about 8,000 contracts. But that week before, it was an all-time record.